Hi everybody, Bob Icino from the Stock Think Tank, giving you your weekly update video, and you'll notice 3 things that are different about this particular video. Number 1, I'm doing it basically out in the rain. I'm in a covered part of my house here outdoors in South Florida, but I am outside. Number 2, your video is late. Part of it is because I was preparing for Tropical Storm Ida, which is raging behind me. And number 3, you'll notice these earbuds, which I have in because of the noise of the storm. Now, why am I doing it outside, potentially getting wet? I'm not really getting wet. It's because the storm behind me has some parallels to what's going on in the market right now. Tropical Storm Ida was predicted to be much, much worse on residents of South Florida than it currently has been. Don't get me wrong. There's been damage, there's been flooding, there's been high winds. But part of the reason your video is late is because I was out on Friday preparing for this storm, as officials told me I should, right? Buying things that won't go to waste, but we didn't need. Getting things like water and batteries and flashlights and canned goods, things like that. Those things won't go to waste, but I didn't really need them, as the way the storm is going so far. Still more to come. What we're seeing in the market right now is a stock market rally and a bond yield increase that's just huge on a one-day basis. Right now, the Russell's up almost 5.5%. The Dow is up 4%. The S&P 500 up almost 2.75%. And the NASDAQ bringing up the rear, up about 0.75%. But some of these stocks are not rallying, namely BIG, B-I-G, Big Lots, which is one of the ones that you're in for this newsletter service. Now, this highlights a couple of things. Number 1, what's going on with this vaccine is a bit of an overreaction in the stock market because they're taking hedges off. They're not necessarily buying the crap out of stocks that are now going to go back to the moon with the pandemic being gone. That's not really what's happening here at an institutional level. And I know this because I spent a lot of years at institutions. They are covering hedges that they thought they would need because the pandemic was going to be here for the balance of the year and into 2021. That's probably still the case when you realize that, number 1, we don't even have emergency use approval of the vaccine yet. And number 2, there's only 50 million doses of it available. So we probably still have the pandemic. And you're likely to see a decent amount of this reverse in the next few days. We probably won't go back to the levels we saw on Friday, certainly not the sell-off that we saw on Thursday and Friday of the previous week. But we're likely to give some of this back. And you're already seeing it. You're seeing it in Pfizer, which was up over 13%. It's now only up about 9% as I talk to you. Still a big jump. But there were people that were chasing it off the open. We don't even know if Pfizer's going to make any money on this vaccine. So how do I compare that to this storm? Well, I prepared for the storm to be devastating. And it isn't. At least not so far. Now again, I'm a new resident of South Florida. Over time, I might get used to these storms, the prediction of these storms being terrible, and then I under-prepare. And what's going to happen to me then? I'm going to get crushed. I'm going to get killed. So if I learn my market lessons, I won't do that. Every time they warn me that it might be bad, I'm going to prepare. So in reference to Big Lot, what does that mean? We're still well away from our stop price, which is in the $42 area. So we're still a good, decent distance away from that. It's still holding its 50-day moving average. And if you were a member of the full stock think tank, our normal 10-stock portfolio was reduced to about 3. And if you look at our performance from last month, we beat the S&P by a little bit over 5% because we took capital. So we were up over 4%. The S&P was down over 2%. From that perspective, we reduced the overall exposure of the core stock think tank portfolio. Big Lots is one of our holdings, down 4.5%. You know what another one is? Tyson, up 4.5%. You know what another is? UNM. It's Unum Disability Insurance. They're up over 13% as I speak to you right now. That's why a portfolio approach with a balanced amount of risk in every stock works. Because right now we have Tyson Foods offsetting Big Lots. It allows us to hold Big Lots and not really feel much pain. And we have Unum Disability Insurance, UNM, which is up huge for us. So that's your weekly update. I'm waiting to see how this plays out. You might get a core portfolio trade this week. You may not, depending on how the stuff plays out. We need markets to calm down so we can do the responsible thing. I'm always going to calm you down when markets are up, and then I'm also going to have you not panic when markets are down. The whole point is to be equanimous, balanced the whole time, doing the right things. I'm Bob Icino. I will talk to you guys next week.